Welcome traders, back with another video from the FxBigDog. Yes, I can sing karaoke on a Friday all day long, but this is about the markets, and we're going to be talking about the pound Canadian dollar. Now, the pound Canadian dollar is sitting at a very, very important level of support. And if it's sitting at that level, that means that buyers are going to get back into the market, and we're going to start seeing the pound rallying against the Canadian dollar. Now, what is going to move the market? Well, we're going to go ahead and take a look at those details of entry points, stops, and limits. Plus, very importantly, you don't want to miss out on how we're going to be able to manage the risk on the trade. Traders, we'll see all of that right after this. Alrighty, traders, well, welcome back. And yes, we're talking about the pound Canadian dollar. What's going on with the pound Canadian dollar? Well, it's sitting at a very key level of support, which means that we're going to start looking to buy. Now, normally I would go ahead and post this video on the Monday, but I think it's important that I go ahead and share this information with you today, because you can go ahead and take action on Sunday at the opening, because I'm not going to be around at that time. So we're going to go ahead and take a look at the chart. Now, what I'm going to go ahead and do right now, traders, I'm going to go ahead and pay attention to the lower time frame, but I'm also going to take a quick look at the daily. You see, this is important right here. The daily sits at a very key level of support down here. Now, I'm a wave trader, which means I look at the market cycles, and this is wave 1, 2, 3, and we're at 4, which means, traders, we're now expecting price to move up to our fifth wave. Now, the pip opportunity that I'm referring to is the 600 pips from the low point right here all the way up here to that fifth wave, which there you can see it's almost 700 pips on that trade. But what's left on the trade is from where we're trading at right now to that fifth wave, which is about 460 pips. Still good money that can be made. But the most important thing here, traders, is where do we get in and how we protect our position. So I'm going to talk about a few ideas here. All right, I'm going to give you ideas of exactly what time frame you trade on, where to place your stop losses, and where to go ahead and chase after the target. And then I'm also going to go talk about the equity management around that, right? How you be able to manage your position so that you don't get over leveraged and get all flustered when the market moves slightly against you, because there is going to be a risk of the market moving against us, and we have to accommodate for that, right? And again, the risk that we put into a trade should always be a risk that we can afford. Don't risk anything that you cannot afford. Know that is a #1 rule. Let's go take a look at the charts. So here on the chart, I'm going to go ahead and open up right here. This is the daily time frame. So the first trading opportunity will come off the daily time frame right here, and you're looking for price to move all the way up to this level. So let's go ahead and measure this out. So we're looking at a trade right here that's going to give us about a 482 profit. So that's your profit potential, 482. Let's go ahead and write this down there, 482. All right, that is your profit taking area, right? Now, the most important thing right here, traders, is let's go ahead and take a look at what our stop's going to be. If we trade off the daily time frame, our stop's going to be down here. Let's get that again, down here. And we're looking at placing our stop just below that level there. And I'm going to call that 193 pips. Let's throw another 5 pips below that, because traders, to be honest with you, if price eventually goes down here and breaks through this trend line, we're heading south. And so if your stop loss is 5 pips below that, trust me, I know a lot of traders say, well, you got to put it 10 pips below that or 15 pips below that. I'm saying, listen, if the market's going to come down here and break through the trend line, we're done. All right, it's over, Johnny. So let's go ahead and do this. So 100 and let's go bring that back again. So we're looking at what is that? 193. Let's add 5 to that. Let's call it 200 pips, just because we're buddies. All right, 200 pips in stop loss. So that's what we got. We got a 482 pip target with a 200 pip stop. All right, now that's good. All right, the first thing we're going to be excited about on this is the fact that the market's giving us good equity management, right? We've got great equity management on this trade, because we've got 200 pips as risk and 482. That's about a 2.5 to 1 risk-reward ratio. And that's what we want. We want to be able to risk less and gain more. So we could do this. We could go ahead and trade that. The risk parameters are great. Now, the difference between trading on a daily time frame and trading on a smaller time frame is that you're going to trade with tighter stops, and you may trade after maybe an earlier target. Let's take a look at the options here. So that's the daily option right here. Let's go ahead and move to the next option, which is going to be on the 1 hour. I'm going to open up the 1 hour. The 1 hour is also very key right here. We're at a very key level. And if I go ahead and take a look right here, if I'm going to get in on this trade, which I'm very eager to do so, and get in at this point right here, I'm looking for price to move up, but look what my stop's going to be. My stop's going to be a little bit tighter. We're looking at a stop 89 pips, let's call it 90, 95, all right? We're looking at a 95 pip stop loss. Here it's down here. So 95 pip stop loss on this trade. That's the stop. Now let's take a look at the potential, the profit potential on this. Well, traders, because we're getting in at a very early stage right here, price can eventually go all the way up to now what I'm seeing as a third wave move. Now I'm going to go ahead and compress the charts a little bit. I'm actually going to draw up my fibs. I'm going to use my fibs here. And I'm going to take it from the lowest point right here, and I'm going to move it all the way to the upside right here. And then I'm going to go ahead and say, let's look for the 1.618. So I'm going to draw it, I'm going to pull it back a little bit right here so I can see where that fib extension is, which is the 1.618. Now, this is it right here. We can see the 1.618 is priced there at about 167.75. That means that the profit potential to the upside is about 370 pips. All right, 370. So let's do the math. All right, we're looking at 300. Oh, wrong one. Let's do that again. We're looking at 370 pips right here, give or take a few. But we're looking at that to be the target. And then we're looking at a risk of 95 pips. Now, I'm going to go ahead and pull out this big-ass calculator right here and just do the math. All right, and I wasn't joking when I said that, right? All right, so here we go. So we're going to go ahead and take a look right here. So we're looking at a 95 pip stop, and we're looking at a 370 pip target. So the risk reward ratio on, what's going on here? Hold on. So let's go to 370, divide that by 95 equals, there we go. So we're looking at, and I'm going to have to lodge this up, we're looking at a 3.8, so almost a 1 to 4 risk reward ratio on this trade. Now, traders, can you see that the risk reward ratio on a lower time frame is a lot higher, which is great potential for us to trade? But of course, trading off the lower time frame, there is a little bit more risk of being caught up in any sort of fundamental spiking, whippy-lashy type of movement, compared to trading on the daily time frame. Because on the daily time frame, you almost have to completely change the directional bias in order to go ahead and trade lower and get us stopped out on the daily. But on the lower time frame, on this one right here, we are going to be able to get in tighter stops, better risk reward ratio. But if there's any sort of news comes out and the market goes and spikes up and down for 50, 60, 70 pips, maybe even 100 pips or so, we could be in trouble. But when trading on it with a 200 pip stop, you're pretty much keeping yourself outside that noise. So those are the two risk factors. All right, a lot more reward when it comes to trading the 1 hour time frame. But then, of course, the daily time frame offers you still a good risk reward ratio, but then keeps you out of the noise if there's any sort of fundamental news. So you decide how you want to trade it. All right, everyone has different personalities. Everyone reacts to the market differently, and everyone has less or more emotional decision, or at least emotions when making trading decisions. So you make up your own mind exactly where you are in that big wheel of emotions. So let's go ahead and take a look now on this trade right here. I'm gonna go ahead and place a trade on the 1 hour. All right. And I'm going to throw in a trade with a 95 pip stop. So the first thing I need to do is, all right, I need to understand what my risk is going to be on this trade. 95 pips is what I've established. So I need to go ahead and say, all right, on 95 pips, and I'm going to pull up this big-ass calculator again, and I'm going to go ahead and clean up here, and I'm going to say, all right, if I'm going to go ahead and risk a certain percent. Now, this is very important, traders. This is one thing that traders really struggle with. All right, is to establish what type of risk they're going to risk. So decide on, right from the beginning, decide on exactly what your risk is going to be on your account. When I say that, I'm talking about each trade should be calculated on a percentage risk, not based on pips, but based on percentages. Yes, I know it's a 95 pip stop loss, but what I have to establish is what is 95 pips in percentage when I'm risking on my account. So if I'm going to go ahead and say, let's say it's 25, a quarter percent, right? If I'm going to risk a quarter percent, then I have to go ahead and do the math and find out what the dollar value is of a quarter percent of your account. So just an example, right? If you go ahead and let's say you've got an account size of $10,000, right? And you are going to be risking, let's say you're risking 1%. 1% on $10,000 is $100, right? So that's your dollar value. So you take whatever your dollar value is and you divide that by the pips that you're risking on the trade, and that's going to be able to give you what your lot size is going to be, and then you can use those lot sizes to place into your trade. All right, are you following me right now? All right, put your hand up if you follow me. All right, now put your other hand up if you feel like you're being stupid now because you're putting your hand up in front of the computer. I'm just kidding, put your hands down. All right, so let's go ahead and take a look right here. So if you take a look at the setup right now, a 95 pip stop, I'm going to go ahead and calculate my risk, and I'm going to go ahead and say $5,000, all right, based off the account size, divide that by the 95 pips. Now what I've also got to do is I'm going to divide that by the pip value. Now the pound Canadian, we're looking at a $10 pip value. Let's go, it's a little bit more than that, but I'm going to go 10 pips right now. And I'm going to use that value, and I'm coming up with a 5.26. So that's the lot sizes that I'm going to use. I'm going to use 5.26 lots right here. All right. Now, if the market moves against me, guess what? I'm only going to be risking 0.25% on the trading account. That's the important part right there. No more than 0.25% risk. And that's okay. That's something we can afford. That's something we're going to do. Now, what I'm going to do is I'm going to take 526 and I'm going to add this into this position. So let's go ahead and kill this big ass calculator, and let's go ahead and put in the trade. So the trade's going to look like something like this. Now, whatever software you're using, whether it's MetaTrader 4, whether it's a trading software that has the ability to be able to place trades inside software like this one right here, go ahead and do that. So I'm going to use the software here with smarttrader.com. I'm going to go ahead and say, there we go, place order. And then I'm going to go ahead and say I want to go ahead and put in right here 5.26 lot sizes. Whoops, sorry. 5.26. And then I'm going to go ahead and put my stop in there. And we did say how many pips we're going to be chasing after, right? We said it's going to be a 95 pip stop, right? So let's put that in, 95 pip stop. And then I'm going to go ahead and put my target. My target is going to be all the way up there at the, we said it's going to be 360 pips. All right, there it is there, 360 pips. Now, I can go ahead and label it and give it whatever I want over here as a label. I'm going to say, this is, because I know what I'm going to label, I'm going to call it the H1 signal. And those in my trading room know exactly what I'm talking about right here. H1 signal, and it is strong bullish. I can actually add that on. Strong bullish because we got daily and the 1 hour both lined up in the same direction. So we've got an H1, put a comment there. That doesn't matter how what you want to do there. Once I've got that in, I'm going to go ahead and say place order. All right. Now, it is on a Friday. It is Friday afternoon. You may not want to go ahead and do this on a Friday afternoon. You may say, well, Big Dog, I'm going to go ahead and do this on a Sunday evening. That's up to you. All right. But I'm just going ahead and giving you the information right now, exactly how the trade's set up. And I've gone ahead and given you the details of exactly where entry point is, where the stop's going to be, where the target's going to be, and also, very importantly, traders, how I manage the position. Why take the risk that I do to make sure that if this doesn't work out, I'm still in business after that trade. And that's the important thing right there. Traders, you have a blessed weekend. Thank you for watching. And if you haven't subscribed to this channel yet, you may want to go ahead and do it. Come on, what's stopping you from just clicking that little button, subscribe. And then make sure you click on the bell button as well so that you can get more videos from me as I post them. Traders, you have an awesome weekend, and Eagles are going to win this weekend. Just throwing it out there. I'll see you next time.